pay a higher rate or they won't get the capital. But the winner will be the investor, and the winner will be the nation state. The winner will be the companies that bring these new products to the market. So I think in DeFi and digital finance, let's just do everything a million times faster. Move the money at the speed of light. Let the computers, trade it a million times a second on the weekend, and let 400 million companies raise capital over the weekend by selling a token instead of taking 4 years and $40 million of lawyers. That's the idea. Smarter, faster, stronger. And in the capital markets and the credit markets, the same idea. It's like, make the capital work smarter, make it faster, make it stronger, right? And the loser is going to be the 20th century. And the 20th century deserves to lose.
Buyers of these instruments, who do they have to be? Do they have to have a deep belief in Bitcoin like you do to believe in these instruments? And purchase them? Who do you see as the future buyer of digital credit?
The beauty of digital credit is we took all 4 of those things public on NASDAQ. So any place where you can buy a NASDAQ stock, you can buy them. If you've got money locked up in a retirement account in Australia or UK or Europe or a 401k, you can buy them. They just got listed on Robinhood. We lobbied Robinhood for about 9 months, and those are the first 4 preferred stocks that Robinhood ever listed about 2-3 weeks ago. So you can buy them anywhere. You can buy any security, and they're totally compliant. And in terms of the risk you're taking, well, it's kind of simple. It's backed by Bitcoin. So if you think Bitcoin's going to zero tomorrow forever, then your collateral's bad, so you don't want to buy it. It's like buying New York real estate if you think New York's going to sink under the ocean next week. If you believe that Bitcoin is solid, a solid capital asset, then that's the first thing. And then the second thing is you have to trust the issuer, which is we're a $100 billion company in business, public since 1998. So we're lucky to be reasonably well known and credit worthy, and we've got $75 billion of capital. But on that note, right, today was a big milestone for us because S&P just gave its first credit rating to a Bitcoin treasury company when they gave us a credit rating this afternoon. So we're getting support from the credit rating agencies. We're getting support from our equity investors. And if you trust the company and you trust Bitcoin, then it's fairly straightforward. It's like at that point your choice is, do I want 3% for my money market, or do I want 10% or 20% tax equivalent from one of these instruments?
How big of a signal is that from S&P to give you such a positive credit rating? Doesn't that actually abstract away a lot of the risk to people that I asked you about?
Yeah, I think we did that. We've been doing the math, and there was like $600 billion of capital that could buy unrated credit instruments, and that gets tripled or something just by this one rating. So we'll tap into a pool of $1 trillion of additional capital. We've made good progress so far. Like in the first 6 months, BlackRock's PFF, which is a $15 billion ETF that holds credit and generates yield, they actually allocated like 3.5% of that fund to our credit instruments. So we managed to get, I think they became one of the biggest investors in Stretch. They bought $200 million plus of it in one day at one point. So we got some support from credit investors, but I met a lot of insurance companies and a lot of fixed income investors, and they said, tell us when you get a credit rating because then we can buy it. But right now the mandate on our fund is we can only invest in rated credit. So, credit investors are the most risk-averse investors in the world, and so if the endowment said do this, but make sure you've got no more than 5% or 10% allocated to this rating level, then as soon as you get that rating level, well, now we actually pay 2 to 3 times the yield of everything else. I mean, the truth is, and obviously I'm biased, but I think most of this credit is garbage. It's like preferred stocks from 5,000 banks, and they're all opaque, illiquid assets, and they yield you 4% after tax. And it's like, why would you buy that stuff, right? When you could have something 2 or 3 times better, or 4 times. Our preferreds stretches 100 times to 200 times more liquid than the stuff that people actually put in your portfolio. So I think it's the things will speak for themselves, but we fight against, the prejudice against crypto. And it's like, well, it's a crypto thing. It might be the worst thing we sell is 5 times over collateralized, and it's been unrated. The best investment grade bond in the world isn't 3 times over collateralized. So the worst thing we sell is better than the best thing in the conventional finance establishment. But, as we say, the struggle is real. And, and we have to walk before we run. And so this is a never ending nonstop campaign, charm offensive.
Oh yeah. Just iPad it. Just iPad it. I love iPad forever. When in doubt, just iPad it. iPad the future, suckers. Yippee! Hello. Hello. Just iPad a second.
To persuade the politicians, persuade the regulators, persuade the credit rating agencies, persuade the big money managers, persuade the mega banks. Morgan Stanley, the first deal they did where they were the lead underwriter for us was Stretch. Took us 5 years before we got Morgan Stanley to lead our IPO. So we're winning, but I guess the good news for everybody is we're going to keep winning for the next 10 years. And there's 40 quarters during which Vanguard will first accidentally own my stock, then they will grudgingly let you buy it, then they will allocate 1% to it, and then they'll be like, wow, I guess it's a good idea. And what I say, and I've said it, Scott, and you've heard it, it's like, by the time the bankers tell you it's okay to buy it, it'll cost you $1 million of Bitcoin. And when they tell you it's a good idea, it'll cost 10 million of Bitcoin. So you're getting a 99% discount right now to do the work yourself and show some courage. And you get a 90% discount, you know, when they make it easy for you, but you'll pay 10 times more.
Well, it's been a pleasure watching you do the work for the last 5 years. Ladies and gentlemen, Michael Saylor.
Thank you. There are no losers here. Financial kind of company, right? It's a new form of company. There are banks, there are insurance companies, you know, etc. So a treasury company is a company that issues securities in order to acquire capital. Now, a commodity, really, you're issuing securities to buy a commodity, and if you pick a commodity that happens to be scarce, you create a very powerful feedback loop. Right, work through your mind. If I do this on Bitcoin going up 50% a year, I can easily pay 10%, capture the 40% spread. That is an amplifier.
Yeah.
If I issued the credit to buy soybeans,
Yeah. Without the KGAR,
you
it doesn't
know,
work, yeah.
or natural gas or crude oil or some other, you know, commodity that returns 3-5%, anything less than the cost of the credit, then I've run the feedback loop in the opposite direction. I'm destroying capital as fast as I can. The business is not really much more complicated than that. It's just no one's ever seen it before, which is why people just have a hard time getting their head around it.
And if they don't believe in Bitcoin. Now you've talked about the different preferreds and how even just one could work, and it gives you leverage. And in their last quarterly report, which are brilliant, by the way, you're changing the industry with that, it's great. You showed several slides of this Bitcoin factor, which is like this amplification of Bitcoin. And so by doing the preferreds, you're adding the leverage, which then over time you use a 10-year window. It can give you a Bitcoin
Unintelligent, risky leverage, right? You want to go
part of the tool.
Yeah, so you can have an operating company that has cash flows that uses Bitcoin as a treasury asset. If it's a retailer, if it's a utility company, a power company, a water company, a, fill in the blank software company. The world's full, every one of the Mag 7 companies. The world's full of companies that have good businesses that generate cash flows, but they have a defective treasury strategy. All of those companies have a treasury which is not generating shareholder value.
Just iPad it. I love iPad forever. When in doubt, just iPad it. iPad's the future, suckers. Yippee!
Is created a pure treasury company. So our risk-free rate, our hurdle rate is 30%. That's what I expect out of Bitcoin over the next 20 years. 29%, but let's call it 30% to round up. So my benchmark rate is 30%. If I put leverage on it, I should be able to grow 50 or 40. I don't think there's any non-financial company. There's no physical company that's going to actually appreciate at that rate, because you can't do it with real estate or oil or natural gas. The investment cycles are too slow. The development cycles are too slow. The risks are too ineffable, etc. So I would say across thousands of companies, every company ought to recapitalize their balance sheet on Bitcoin, because that will cause them to grow 50% faster than their peers, or than they would otherwise. They'll just be better. And it compounds. Yeah, so $1 billion company will be worth $10 billion instead of $2 billion in a decade. Okay? If they were a pure play, they might go from $1 billion to $100 billion. They won't do that. But that's not their slogan. So I just think it's not a bad idea, but your expectations ought to be adjusted based upon the enterprise value mix, right?
Yeah.
Like, if Microsoft bought $100 billion of Bitcoin tomorrow, 98% of the enterprise value would still be indexed to the software business, right?
Yeah.
If they bought $1 trillion of Bitcoin tomorrow, they still be 75% indexed to the software business. So you can't get to 100% digital exposure unless you actually start with a clean balance sheet.
Yeah, starting with a clean balance sheet. So it seems like for the new crop of companies that are starting up, in MicroStrategy, when you raised the convertible debt, then you had the debt to cover. So then there was a lot of questions in the industry about how you cover the debt, what's the underlying business model. But in sort of the strategy 2.0 version,
skip that.
If you could just go raise $1 billion of Bitcoin and start issuing preferred.
If I were doing it again, I'd raise $1 billion, I'd take the thing public, and then I'd sell 100 million, 200 million, 300 million worth of preferred stock as soon as possible.
Yeah.
And then I would rock back and forth between levering and delevering the thing, and I would grow it with the minimum, most elegant set of credit instruments. If you